Ross, thank you for joining us today.
Thank you, Glenn.
Now, in the session that you moderated at the conference, you spoke to two small cap managers, so Dawn Cornelius from Colonial First State and Ben Griffiths from Ely Griffiths. In terms of small caps, that session title, what do we mean there when we say higher returns but greater risk?
Well, Glenn, traditionally investors have looked to large cap stocks to get higher returns, and that's been quite a sensible strategy over the past 10 years. If we have a look at the ASX 200 and let that represent large cap stocks, we can see that the return has been something like 11% per annum on average over the past 10 years. The average large cap fund manager's done reasonably similar sort of return over 10 years. But then if we have a look at the average small cap fund manager, they've done something like 16.5% per annum over the past 10 years, which is a great return. So more and more investors who have traditionally looked at large caps are beginning to look at small cap fund managers and small cap stocks as a way of getting higher returns. But there are higher risks. Traditionally, small cap stocks are younger companies in their development cycle. They haven't been trading for as many years as some of the larger cap stocks that have perhaps been trading for 50, even 100 years. So there are risks there, and we've certainly over the last 10 or 20 years, we've seen some of the risks associated with those small cap stocks. While they can rise very high, the fall can be very sudden and certainly to a concern to a lot of investors.
Is there much difference, say, in Australia in the way that we think about or define what a small cap stock is versus some of the other markets?
At Morningstar, we assume that basically the top 200 stocks, the ASX 200, are the large cap stocks in our market. But the Australian Stock Exchange has over 2,000 companies listed on it. So most small cap fund managers would exclude the top 200 companies because they're large caps. They would perhaps exclude the bottom 200 companies because they're very small and micro cap stocks, but that still gives around 1,800 stocks that small cap fund managers have to trawl through to find those true investment gems.
Do Australian small cap investors have much variety, much diversification of choice in terms of selecting smaller companies to invest in? Is it all IT tech startups and with a smattering of backdoor listed Israeli marijuana companies perhaps? There's a wide range of stocks in the small cap area.
Look, if we look at large caps, it's very much dominated by banks, insurance companies, that sort of financial services sort of sector. But in small caps, you've got a variety of sectors. You've got healthcare, you've got agricultural stocks. Recently, we've seen an expansion in the milk industry, milk-orientated stocks like Bellamy's. We've seen A2 Milk, which was a small cap stock that's now a large cap stock.
Ben and Dawn also got into some specific companies that they are quite bullish on. What were some of those that they were mentioned on the day?
Yeah, two very interesting stocks they mentioned, Glenn. And Dawn, firstly, outlined her thoughts on NextDC, which is a data storage, data business that really is growing with our expansion of use of the internet. And it's a stock that, for Dawn, has gone up over 50%. Now, Ben Griffiths, in his portfolio, he has a stock called Seven Group Holdings. Seven Group Holdings is what we'd call as a little bit like an old-fashioned conglomerate. It has a number of businesses within it. It has the Coates Hire business, which hires out equipment, and certainly equipment to the expanding infrastructure sector in Australia. Another part of its business is it owns the Caterpillar business. They also have holdings in Seven Media. They have holdings in a number of oil stocks, including Beach, a number of interests in that industry. Ben has done quite well out of that stock as well. I understand that from where he first bought it had gone up over 90%.
And I guess that's where some of the benefits come in actually investing in some of these companies via a fund, whereas in Seven Group Holdings, for instance, is one that our equity analysts also cover as an individual company.
Yeah, definitely. And they're always analysing. They're out there looking for new companies. They're building big spreadsheets so that they really understand the cash flows, the earnings, what drives the growth, and also what impacts the expenses in these business that an individual really can't do or would struggle to do if they were going to build up a portfolio of small cap stocks. So in a lot of ways, that's one of the ways that they're able to lower that risk that an individual may face if they were attempting to do the same thing.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.